Good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to Aftermarket Monday. Today's report's going to be quick and simple as we just take a look at what's going on. Remind everybody that all the materials we present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance does not guarantee future performance. Our objective of Aftermarket Monday is to basically just some timely, actionable intel to begin the week. If you are a premium member and have watched last Wednesday night's training session on seasonality, you know that Mondays are typically not great days to be trading per se. Now, that's the tendency. And typically, because a lot of traders will basically just stay away from the market on Monday and then let themselves get set up for what's going to be taking place through the rest of the week. And that's I try to take that approach basically. So we want to do a real quick market review, take a look at some stocks, ETFs that may be setting up. We want to go on to, here's where we're actually sitting. I like this cartoon. Whoops. Let's go back. I like this cartoon here. It's a couple of years old, but it basically, don't panic. This is just a correction. And we seem to be just, the markets have been just basically running up real hard with large volatility and a large range. We need to keep that range is what kind of makes it sometimes very tempting to go ahead and just do these shorter term trades. And in reality, if you can find something that's giving you, anywhere from 3, 4, 5% on a daily basis, and you just close it out at the end of the day, there's not a darn thing wrong with that. So don't beat yourself up because you're not in some long-term trade, because at certain points, like the market we're in right now, doesn't necessarily set itself up for long-term trades. As I said earlier, this was a very interesting up-down day. In other words, all the indices finished up primarily for the day. However, they basically gapped up and then basically started selling off very succinctly. So we'll take a look at that. Want to remember the 4 trading outcomes. Constantly remind yourself of this, especially if you're just new starting out in trading. 1, there's 4 outcomes that can happen from any trade. 1, you win a little, you lose a little. And then 2 and 3, you win big or you lose big. The objective of any strategy or any mechanical system we utilize is to move the X up here where it covers the the lose big. That's supposed to be crossed out there. Eliminate number 4 and your which is your biggest risk, and we will make money in the market. So that is the objective of that. I'm going to fix that before I go much further. Here we go. See what it looks like now. Oh, there we go. Got it right. So I want to remind everybody that if you're not familiar with market seasonality, market does have its own seasonality. We're currently watching gold. This is going to be basically our bonus trades for the year is going to be looking into gold. And what gold tends to do is kind of move sideways between the March through about the June-July timeframe. And we're seeing that work out in the market right now. But the thing I want to remind everybody that we typically trade the miners, in this case the junior miners, and it's a 3-time leverage ETF that emulates gold. What we see is that what happens is during the year it has several runs that are really excellent. This just highlights 4 of the runs that it went on last year, 2017. Even if we only capture half of those runs, that's still one heck of a return. And what we have to do is learn how to balance our risk reward so that we're in on a large portion of this run. We'll take a real quick look at gold today before we close out. And so here's the opposite side of this. This is called JDUST or JDST, 3-time leverage junior gold miner. This is to the bearish direction. In other words, that's why they call it inverse. It also 4 nice moves last year. And look what would have happened here. $1,000 invested would be worth $3,200 at the end of the year. One of the other things that I'm working on from a cash flow perspective that will probably be offered and as something additional to the active trend trading system is some work trying to get cash flow utilizing futures. If you've never traded futures, it provides a very interesting opportunity, especially for those with a smaller account. You can still participate in the some of the larger moves. Right now, with the range of the market and the volatility in the market, we're getting some huge moves. I mean, $150 point move on the NASDAQ, with each one of the points being worth $20. That adds, that can up to a really nice move in a very short period of time. The thing about it is what I'm testing right now is to see how well the active trend trading system supports the triggers for utilizing and trading futures. So if you happen to be interested in that, just shoot me an email and say, hey, that's something I would be interested in when it's finally launched. And we may be launching at the end of the year. I don't know when, but we're working on it right now. So let's see what else we have here. ETF setting up for the year. Seasonal expectation. I read an interesting article by some dummy who was writing for USA Today, and I found it very interesting. He calls volatility the new normal in the market. Well, dadgummit, it's not new normal. Somebody who's been around the market during what tends to be a topping type process knows that when a market's topping, we are basically going to see larger ranges with more volatility. So is it the new normal? Heck no, it's not the new normal. It's just basically seasonality that's taking place. That's it. Wide range moves. This is where, and what this lends itself to is you look for those horizontal levels of support / resistance. In this case, this would be support demand and resistance supply, where we basically either want to get into the trade if we're trading to the long side or downside, or where we want to get out of a trade. And they're marked really well. And for right now, the market is definitely obeying those situations and those levels. So I'm waiting for setups on JNUG and JDust. We have 7 ETFs with the active trend trading system. We trade Netflix, Tesla, NVDA, YY, and BABA for some of the stocks. Those are kind of our core stocks right now. Although I'm looking at replacing some of those. Grubs look like something very interesting, and a couple of other ones there. 3 strategies, 4 entry rules, 6 exit rules. Keep it really simple. 3 are strategy 1, stock portfolio building. Strategy 2, income trades. And we're really focusing, starting here in April, trying to get these income trades out towards the end of the week, like we did with Tesla last week. And right now, that trade is looking exceptionally well. Target, $500 to $1,000 per week. And we'll be taking a closer look and measuring that more succinctly going forward. Strategy number 3, basically we have foundation positions in the spiders, Tesla and BABA, and then we sell premium against that on a weekly basis. That also is working out really well. And we also want to remember that there is no holy grail of trading. There's only tools and rules. And if you don't have a good solid set of rules, hey, I encourage you to check out the active trend trading system. You can check it out for a couple of months and learn a lot about how to set up a good mechanical system. So I wish the weather in Hawaii looked like this, like we see here at Kolina, one of the Kolina Coves today. However, it doesn't. It looks a little bit more like San Francisco or Seattle weather with the winds blowing, and it is cold and rainy. And I know the cold here is different than the cold there, but let me complain about the weather for just a little bit. No, just kidding. So, okay, hey, let's take a look at some entities, see where we're going. Okay, I want to talk about the SPY and not the S&P, just simply because it's showing us some very interesting situation patterns. We've got the SPY. Where is it at? Well, one, weekly chart. We just had a crossover. The 8-week just crossed at the 20-week. So that basically is like the 50-day moving average, just about crossing the 100-day moving average, which is just about what we're seeing over here. What's a big difference? We had a trigger like around here to get into an early warning trade. We got a real quick bounce up, then nothing, no follow through, nothing whatsoever. Unlike what happened earlier in the year in February, we get a trigger, nice follow through, nice trade. And right now we're just kind of like, we're in a meat grinder. And this is where I say, if you are going to trade the meat grinder, trade it close to support or close to resistance, because you want to be really, really close to where the potential you want to be close to where you're going to be basically stopping out. Let me throw a couple of pictures on here to kind of highlight this. And I'll go over here to do this. One is these long candles, okay, with the long wicks tails, if you will, they show us where buyers came in the past. Well, I can draw basically a really nice little channel across there, and I'll just make it about like that and go, okay, that looks pretty good. And I'll take it, and you're sitting there going, what are you doing, Dennis? Okay, there we go, right about there. And what I do is I'm capturing kind of this little basing pattern over here before this is the origin of the last strong move up. Well, as you can see, it corresponds very nicely to what we see here with the, and so as we can see, in February, we launched up really hard up towards the new high, failed to make a new high. Today, what I'm talking about is yes, today was up $1.28. However, today's candlestick, that, my friends, is not a bullish candle. That is much it basically opened here, ran up really hard right to a level of resistance just below the 8-day moving average, reversed hard down, and yeah, it did hold above the 200. But oftentimes in these kind of markets, you get this ping pong effect. It'll hit the 200 and ricochet back up to the 100 or the 8 and the 20. In this case, it just barely almost made it to the 20, reversed down. So 265, good resistance. Anywhere down in this area, possibly good support. So if we wake up tomorrow morning, and hopefully everybody plans on waking up tomorrow morning. We wake up tomorrow morning and we see that price is, let's say, down in this area between 255 and say 257. And we roll over to the intraday chart, and the intraday chart looks like, hey, I'm ready to bounce. Let's take a look at the intraday chart and see if it is ready to bounce. Where are you? There we go. And here's the intraday chart. This is a 30-minute chart. We'll whip over to a I use somewhere between a 30 and a 1-hour chart. Just occasionally we'll throw up a 15-minute chart, but not very often. As we can see, it weakened and fell. I'll get rid of that. So if we wake up tomorrow morning and find that it is down here between the 257.50 and the 255 level, and my true strength index has dropped all the way down here to a -50 or lower, that might provide an opportunity to say, hey, I want to be buying calls on SPY, or I will test it. Because if I get in at 255 or even 257.50, where is my stop? Well, my stop's going to be directly below this level right here. Worst case will be directly below this candlestick right here, which is, what's the low there? 254.67. So I give it out down to 254ish. That would be my time to get out of jail. So let's take a look at the Qs. What is it? What are the Qs showing us? Well, something very similar. Again, with the Qs, instead of using the little block showing where my support is, I'm using the fibs. Now the fibs now this is measuring the fibs from here to here. There's also a fib mark that we could take from this point right here up to this level. And oftentimes and let's throw that up there just real quickly. I don't want it to be too confusing, but I want to see one thing. Okay, here is the 786 on the move from here, from February up into the first part of about the 13th of March. And so that move, we have not closed, but if we get a close down here below the 786 extension or retracement, that increases the potential, the probability that we're going to get a complete reversal all the way back to the 100% line. What kind of pattern? And now let me get rid of those. Remove old drawing, clear these drawings. Yeah, there we go. Bingo, bingo. And so let's run back over here to the daily, weekly. And we can do something similar to what we already did on the other. We can draw in and say, okay, where did we get our, where did the last rally start? And we can say about there. So that, again, just gives you another highlight. And if you're in the, somewhere between the low here, 151, almost 152, which will be below the 200, which is a negative sign. But that's where we'd anticipate a potential bounce. Now, this is the formation that we see here is a topping formation. Throw on TQQ. And again, you can lay in the same, get rid of that. Oh, you can lay in the same thing for TQQ and utilize that for your potential. Okay, if it gets down in there, that's where it may bounce. IWM, similar situation. Again, IWM, it only closed up 18 cents. It went all the way up, struck the right at the 20, 108, and closed right down back below it. You can do the same type of construction over here and just highlight and say, okay, if it gets down in that area, I want to be alert to a potential bounce. But the flip side of the bounce scenario is it drops down to, let's say, the 145 level, or even go down to here to the 142.39. That level breaks there, then we're going to go back down here and we're going to probably revisit the 135, or even potentially all the way down into the 125, 130 level. The other thing I like to do when the market is showing its toppiness is I want to know where my 20% retracement will be. Well, I just draw a line on there, keep drawing it down there, right about there. And so does that make sense for a 20% retracement? Sure does, because look what's going on over here. Where it's basically right there at the bottom of that, or that little gap up. That's where, the start of a pass rally, as you can see. So, it would not be unusual. How about just to pull back into, that past strong support 134 level? That's about a 15% pullback. So my question for you guys is, what's your bias? Is your bias to the downside or is your bias to the upside? And define that as you're doing your analysis. My bias is a little bit to the downside, simply because the moving averages on the weekly are turning over. TSI is dropping below the 0 line. And a big one, market forecast green line, its longer term momentum is also falling. I want to also be aware, please take a look. I hope you were able to look at the art and science of active trend trading last night. I talked about this a little bit. Go to the weekly chart. Find out what past things have done, what past things have looked like. This is back in 2015 when we got into the almost to a bearish market, but it was a really strong pullback or correction. When TSI, when market forecast got down there in their lower reversal zones, that resulted in a very strong rally. So we want to be ready for that and just observing. Right now, it looks like it wants to, accelerate to the downside. We'll see if it does or see if it doesn't. So TNA. So watch to potentially trade TNA TNA for a bounce. Do this. There we go. The other thing about this is that if you don't want to play things to the upside, you can go also to the other side. TZA may be setting up for a potential bounce higher. We'll just have, just keep your eye on that. That's what we've got going on with that. Now let me throw out a couple of other ones, and then we will basically call it a day. I hope going into this level of detail gives you some ideas for the indexes themselves going into the rest of the week, and also drives home the point of wait for horizontal levels of support and resistance. That's where to plan your action on. LABU is, just keep an eye on this. It is basically retesting back down here in this lower level. Yeah, adjusted back there on Friday. Not a positive move today. Again, yes, it was up for the day. Hit the 8-day moving average, reversed down off of that. A lot of similar patterns today. USO, UCO, that's the leverage ETF. I kind of like this. We've done a nice little pullback, lower volume, get a bullish harami today. If we test down somewhere between 25.50 and breaking out above the 20s, let's say about the 26.37, 26.35, that would be a potential buy to ride this back up to the 28 level with the anticipation that oil is going to continue to rally. Worst case, we get up to 28, we take some profit off the table because that would be a move of about 8.5%. Take another round of profits. We're still in the this trade with a half position that we started earlier in the year, and so we'd already closed that out for about 10% on half of it. And so let's see what else we got here. Let's see what else we have here. LABU, JNUG. Again, JNUG looked like it was going to break out and start rallying today. Not the case right now. In no man's land. This is the meat grinder phase. Where is JNUG interesting? Down here close to this line, or up here close to this line. The flip side of that, of course, excuse me, if it gets up to the top side, looks like it's going to turn over, you may want to go over to JDust. Right now, JDust and JNUG, they are, kind of the only, this is about the only two of the inverse and non-inverse ETFs that I would trade. I would look at, probably TZA or TNA, just in case the market falls over, because TZA is the ETF. Wouldn't feel too badly about trading. When I say feel bad, I wouldn't. I would consider this positive to trade to the upside. And the other one is SQQQ. Same thing on here. SQQQ. Actually, it did put in a low back here when well, at the same time that the NASDAQ was putting in a high. So it put in a low here on 12/30, the week of 3/12, which turned out to be the day of 313. And so it ran here. Just be aware of how far it's run. Okay, darn thing, it ran up here 33%, and we can get distracted and miss those. And so that's what we want to be working on in the rest of the year. You know, when we get these TSIs down here towards the bottom, the lower reversal, we get the market forecast on a daily basis down to the lower reversal. We want to be able to take advantage of this. One of the things that's quite interesting is this is on SQQ. This is kind of a very positive move on market forecast on a weekly basis, which tells us that there may be more downside to the current correction, and which in this case on SQQ would mean there would be more upside to the potential move. So, okay, my friends, that basically just covers everything I need to cover for today. I hope you are a premium member so you can log into the training on this coming Wednesday night. What we're going to be talking about is we're going to talk about the mechanics of conditional orders. We will cover how to put in conditional orders for things like how do you put in a conditional order if you're trying to do a spread? How do you do a conditional order if you're trying to buy or sell an option? And also, of course, the regular ETFs and stocks themselves. So with that, I bid you adieu. Have a great rest of the day, and we look forward to, again, I'm waiting for support, and I want to get closer to where we stopped out. So God bless everybody. Have a great rest of the day. Aloha.